Good morning, ladies and gentlemen. Welcome to the show. Listen, I'm glad to have you guys here. Today is July 2nd, 2019. And, let's get right into the show. We're going to start with opening the charts right here and take a look at the silver price today. We're looking at 1507. It's gone down some. And you can see it had a funny spike downward, almost like a flash crash there earlier. Where it went down almost down to $15. Now it's responding back from that. If we take a look at gold today, $13.90, and we're looking at basically going sideways here. There are deflationary pressures out there, but there's also inflationary pressures right now. The Fed's getting ready to do a rate hike here in July. I believe it's going to be a 25 basis points rate hike, or a 1/4%. I think they're going to do it here in July. I don't think these rate hikes are going to actually help the economy very much, and the reason why is they want to encourage borrowing by lowering the rates, so it'll stimulate the economy. Because central banks, when they create a loan, basically what they're doing is they're creating liquidity and they're dispensing it into the system. This is the fractional reserve money banking system way of creating money, and it's a more powerful tool of creating money than quantitative easing even. But in order to get it going, people have to be not tapped out. People have to be able and qualify and be able and ready to make a borrow money. And we're seeing that people everywhere now are getting completely tapped out. Their credit cards are tapped out. They can't borrow anymore on their credit cards. Their mortgage on their house is mortgaged to the hilt. Maybe they even got a second mortgage or whatever. Or they got car loans they've taken out. They've got student loans they've taken out, and they're just in debt up to here, and they just can't borrow anymore. So this cutting rates is not going to work very well. Let's take a look now at cryptocurrencies. Bitcoin. What we're seeing is we're seeing a price correction, and if we back this chart up just a little bit, we see a very strong support in here at the $8,000 level. Well, right now we're dropping down toward that $8,000 level, but I don't think we're going to make it all the way down to the $8,000 level support before we're going to see it bounce back up again. This is just normal movement in a bull market. Now, I looked at an article this morning about Bitcoin, and it was a Bitcoin bear, and he was saying how this is the beginning of the end, and Bitcoin's just going to go down lower and lower and lower, and the bears are in charge, and, this is just normal movement in an upward trending market. It's normal for it to drop off a little bit and then bounce back and then level out, and then go along that way for a little while before it starts to go up again. This is normal activity. Let me just refresh the page. We're looking at 10,051. Okay, 10,069. So it's uptrending right now, albeit very, very slowly. This correction might be ending now. It might be coming toward a close. Let's take a look now at cryptocurrency market capitalizations, $294 billion. And a Bitcoin dominance of 60.4%. We're seeing the Bitcoin dominance drop back. It was like 62%. Now it's like 60.4%. When we see that Bitcoin dominance drop back, it indicates that money is starting to pile more into the altcoins from Bitcoin. If altcoins take a big jump, in price, Bitcoin and altcoins go together like gold and silver go together. Silver goes up, gold generally goes up. If gold goes up, silver follows. Same way with Bitcoin and the altcoins, They kind of tag along the way silver tags along with gold. Now let's take a look here at we're going to do crude oil. And then we're going to get right into the markets. Crude oil is down today, Now, Iran has breached. They've breached the nuclear deal. This has serious implications for crude oil prices, or could very well have serious implications for crude oil. Actually, it could have serious implications for all of us. It just seems like the whole thing is setting up for a bad situation over in the Persian Gulf region. Very bad indeed. It's very tense over there right now, and it's only getting worse. There hasn't been any relief lately from that situation. Let's take a look at the Dow now. 33 points down on the day. The market, okay, 15 points down on the day. It's jumping back up again. It could end the day in the positive side very easily today, you know. 26,702, you know, and this market is being held up on the promise of rate hike cuts in the very near future. I think once they play this out, then what do they got left to carry this market higher? You know, this market is being buoyed with nothing under it. It could fall several thousand points before it would come down to a point where it's like, I'll tell you what it's like right now. It's like what Bitcoin was when Bitcoin was at 13,800. It was just up too high. Nothing's really supporting it. Now it's fell down to 10,000. Now Bitcoin will probably go back up again, you know. But Bitcoin has a lot of good fundamentals compared to this market. This market's completely oversold. Let's take a look now at U.S. Treasuries, and we're seeing falling Treasury yields today. We're seeing it move more toward the yield curve inversion, with the short end of the yield curve rising again now. And you know, the U.S. 1 month has risen quite substantially today, 3.5 basis points, and we're seeing the long end falling. We're seeing even the U.S. 30 years fell 1.9 basis points. So we're moving more toward the yield curve inversion today again. Let's take a look at the U.S. dollar index. 96.79 on the day. And, you know, if it wasn't for the fact that this dollar is being compared to a bunch of garbage, really, the euro is the biggest thing that they're comparing the dollar to. So yeah, the dollar is holding up pretty good because of what it's being compared against. 96.78. We're probably going to start to see a strong dollar as we start to move more toward this recession starting. Or actually, I believe it's already underway, but the proof of it starting comes with 6 consecutive months. That's 2 quarters of negative GDP growth. That's before they'll declare an actual recession. You have to have 2 quarters. I don't know who makes up these rules, you know. Let's take a look now at this. Affordable housing. Amazon is making an $18,000 house, and it comes with free shipping. And you know, it's a really cute little house. And you know, I wanted to talk to you guys about this for a minute. You know, most of us have houses that are maybe 10 times bigger than this. Or at least 3 or 4 times bigger than this. But you know the funny part about your house? Now, tell me if you've noticed this before. Generally, you have an area inside your house. A little area in the kitchen, a little area in your bedroom, and a little area in the bathroom, and maybe a little place down the hallway you walk to. And all those extra rooms you have, like maybe you might have 4 bedrooms or whatever. Maybe 3 of them, one of them, in fact, you call it the guest bedroom, and you never go in there. You only go in there to clean the cobwebs off of out of the corners and stuff, and dust off the bed dresser or whatever, and remake the bed. And otherwise, you shut the door and you never go in there. You probably got 2 or 3 rooms like that. You never go in. The actual place in your house where you actually live, and you constantly walk in and walk out every day, and go to the bathroom, go to your bedroom, go to the kitchen, is just one little area inside your house. No bigger than this, actually, this small house right here. The rest of the house, you have to heat it, you have to run electricity through it, and you have to pay for that extra, all that extra space. You have to heat it and you have to cool it, and it's an awful lot of extra cost and expense and extra maintenance and everything else and extra property taxes, and it makes a bigger footprint than what you actually need. What you're going to find is this size house right here can provide a person with everything that they need, and once you're using it, you find that it works just as good as the big house. And it's a heck of a lot easier to heat and cool, and a heck of a lot easier on your pocketbook, you know. And so I think what we're going to see is, as we see this credit expansion that we've been going through start to go the other way and start to contract, and then the government tries to prop it back up with more funny money, and inflation starts to come, you're going to see a bigger and bigger movement toward these tiny homes, because people just can't afford to. They're going to have to downsize into something this size rather than living in the big house that they got now. Yeah, it's either that or be on the street. And you're going to see more and more people downsizing into these tiny homes, and you're going to see this movement increase vastly. Basically what they're doing is they're squeezing all of us. They're squeezing the middle class people, and until in the end, all we're going to be able to afford to live in is basically a tiny little hut. If we can afford that. We'll be, in the end, if they keep squeezing us in the end, we'll be lucky if we even are able to have a car to live in the end. As they keep getting richer and richer, their mansions keep getting bigger and bigger and bigger, and the opulence keeps growing. Ultimately, at what point do the people finally snap? Something snaps in all the people at the same time. They just get down to a certain point, and then all of a sudden something snaps. This has happened before in history. Do we have to repeat history over and over and over again before we finally understand that how things function, or do we have to keep making the same mistakes over and over and over again? The rich are greedy. They'll keep getting more and more money until in the end they keep compressing us down smaller and smaller, until finally we just can't stand it anymore. And that moment comes when people cannot feed their families anymore. That's when that moment hits. They snap all of a sudden. The general population, everyone within the general population starts to think the same way at the same time. It just occurs simultaneously within the entire general population, and that's the time when these people who have been taking advantage of the general population, well, let's just put it this way, they'll be in big trouble. Listen, thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. Bye-bye.